Welcome to the Fail Forward podcast. The purpose of this podcast is change the negative stigma around failure into a positive. Failure is only a negative if we do not learn from it and we give up. Welcome back to the Fail Forward podcast. Today I've got Peter Bryant, the crypto professor, with me just to share his story and go into also talking about the world of crypto. So welcome, Peter. Thanks for coming along.
Thank you.
So take me back as far as you need to go to sort of your journey and how you got to crypto as well.
Sure. So I kind of started as a musician. I was a specialist musician at Peter Simmons in Winchester. That's kind of where my kind of studious element came out the most. I wanted to be a musician, basically. I wanted to perform. I wanted to be a percussionist. That was my chosen area of specialism. And I went to Surrey University to do a music degree. And during my music degree, I realised I was reading more about psychology than I was actual music. I was doing obviously everything I needed to do for the degree, but I was actually reading more, I was interested in more psychology. So at the end of my studies, I was going to do a master's and I was going to do music. And then 6 weeks before I was due to start, a supervisor who I was speaking to at the time clicked that I didn't want to do a practice degree, practice masters, where you actually have a discipline and you train and you do it like a conservatoire, for example. Yeah. I actually wanted to do a research masters because I wanted to understand things and I wanted to pick things apart and tease out why things worked and why things didn't work. So I actually, with 6 weeks before the deadline, applied to a psychology master's in music, mind and brain at Goldsmiths in London. And within the space of a month, I'd basically changed my entire trajectory from music to psychology. After using the opportunity to go to London to study for a year, I also wanted to train to be a hypnotherapist because that was really interesting to me at the time. I'd actually watched Darren Brown on the television and really become hypnotized, literally, about his way of viewing psychology and viewing it as a ways of understanding people's perceptions and belief systems, as opposed to just taking everything for granted and people just accepting what they're told, etc.
Sure.
So I started a 5-year qualification in hypnopsychotherapy, which is the most rigorous I could find. If you're looking for rigor and empiricism in hypnosis, you don't study in the UK. Generally, you go to America, and they have a much more empiricism-friendly approach to psychology and hypnotherapy in the States than here. But I was actually able to luckily find the National College of Hypnosis Psychotherapy, where I did my 5-year training and became a UKCP accredited psychotherapist. So what does that mean? Well, that basically means that I can work with a whole range of different issues and symptoms, and that's what I've been doing for the last 3 to 4 years. And as I was doing that work, as I was working with those clients, 2,000 clients over the space of 3 years or so, I noticed that a lot of them were very financially disempowered. And that was actually exacerbating their psychological issues, because they had these issues. They might have depression, anxiety, etc. But those symptoms were exacerbated by their lack of financial resources. And, you know, being a psychotherapist in the UK, you're charging maybe £100, £150 a session. You know, not many people can access the help that they need at that kind of remit. So in 2018, after qualifying, I decided to pivot and enter the world of finance. And again, within a very short space of time, a month actually, I found a job in a brokerage working as a broker for a small boutique hedge fund in Winchester. Worked there for 2.5 years, traded over $10 million of profitable trades, raised $1.5 million just by cold calling on the phone to individuals.
Wow, impressive numbers.
And basically learned why crypto is important. And that's where my kind of journey with crypto began, because once you start understanding crypto, you can understand the main financial models and the way the finance world works through the lens of crypto much more readily than you can if you come from a traditional finance background, because everything, the implicit assumptions are all based on top of each other. But if you look at it from crypto, it's kind of like you're viewing it through a prism, and it exposes its flaws much more readily than you would if you, say, had a traditional finance background. And so that brings me up to the present day, where I'm obviously launching a crypto fund that is helping regular business owners, people who don't necessarily want to dedicate their full time into crypto, how to take advantage of those opportunities, which I genuinely believe are fantastic and outweigh most other opportunities within the investment world, without having to dedicate their entire lives to it.
Amazing. So just want to take you back, because there was quite a few different pivots and different lefts and rights on your journey there, which is amazing just to see how the trajectory changed through that. You're so right when you said about people that you were seeing, their financial state would generally be poor, because I was one of those people. When I lost everything, my mental strength and my financial state was really poor, and I saw a psychotherapist, and we did loads of work on mindset, mindfulness, putting all my demons on a bus and watching them go off. And he was costing me £100 an hour, and it was the best £100 an hour I ever spent, because it really helped me repair my brain in a way. So, I can completely resonate with what you're saying there. It's amazing. So do you do any psychotherapy now, or is you still doing that?
I am still practicing as a psychotherapist. I think it's important one of the things about trading, and especially cryptocurrency trading, is having a psychological toolkit with which to help you in the market. You could be a technical trader in the 95th percentile. You could be fantastic, but if you don't have the psychology there to back it up, you're just gonna make mistakes. So I'm an ardent believer that that they go hand in hand. The psychotherapy, even though if I wasn't practicing, which I still am at the moment, it is a toolbox to be exploited rather than it just being a means to an end, if you like.
Yeah. Definitely love that, because I think you're right, just not just with crypto, but with business in general, having the right mindset and the right thought patterns, along with the hard work, the determination, the skill set to run a business or crypto fund or whatever it is, to have that right mindset is key. They talk about everything in business. They say that the mindset without the skill set will leave you upset, something along those lines. And also, I think Henry Ford says, if you think you can or you think you can't, you're right. So it's so good to have that balance of mindset and running the business. So yeah, I love what you're doing there. So talk to me about crypto and where you're at now in your crypto journey.
Sure. So on 1st of April, I started my own venture capital fund with 10 investors, and things have been going well. Well, actually, we started the fund in April, and obviously we're at, beginning of June now. So the fund actually, Bitcoin, if you looked at the market for the last 9 weeks, has actually been dropped consecutively for the last 9 weeks, which is actually the first time in its history it's ever done that. It's never been as bearish. So we actually launched the fund at a time when the crypto market was, it's turned extremely bearish, but it's still bullish, if you like. We're still expecting upward trajectory. It's just at the moment, the psychology of the market is such that it's going to probably take a little while for people to come around to the idea that crypto is worth investing in again. And that's what we're seeing in the doldrums at the moment, where things oscillate between very narrow ranges. Bitcoin between $28,000 and $32,000, for example. Staying within that range is the indecision in the market, with people going, "Oh, is Bitcoin going to drop lower? Is it going to go higher?" This is where the psychological element comes into it, because if you can infer the market and infer what the market is likely to do, even if it's manipulated, you can get an edge. So one of the major criticisms of crypto is that it is very manipulated, and it is, but it's manipulated by people who you can understand the economic interests of, and therefore you can surmise what is likely to happen. At the moment, a lot of people down at the bottom of the market are buying heavily into Bitcoin. $28,000 is actually a really interesting psychological price point. And that means it's unlikely to go lower than that. If it does, then something else is going on. But basically, the implicit assumption is that Bitcoin will be over 100K within the next 24 months or so. So, context is really important in this. And I think that comes back to failure as well, because understanding failure is really vital in context. Failure changes its meaning over time. So some failures They're very explicit. Other failures are not so much, and we actually tend to think more in explicit terms, especially when they're happening to us or we're in the midst of them, than they are actually in hindsight. So I'll give you an example. I had a business that was a psychotherapy business, and I had 12 employees, and they were operating telephones across the country dealing with insurance claims. So person had a car accident, they wanted rehabilitation, they got physio, and they got psychotherapeutic help, basically. That ran for about 2 years, but the supplier who was supplying me folded. And they didn't tell me that until about 6 months afterwards. So in the meantime, I'd wondered where this cash flow wasn't coming from. I was continuing to pay my staff on credit cards. The whole thing basically imploded. So that kind of experience taught me that to really kind of understand the roots of all businesses. So why were they not getting their cash flow across to me? Well, turns out there was some dodgy things going on up the echelons, basically. But knowing when you have that gut feeling of something's not quite right, really listen to it, because it's usually something, if you're wrong, you can appease that feeling and you can go with it, basically. But if you're right, and chances are, 8 out of 10 times it's going to be right, then at least you're either not understanding something, or you actually picked up on something that it's genuinely a problem.
Sure.
And that experience of going through those failures, I wouldn't have that kind of implicit sixth sense to trust my instincts like that if I hadn't been through those experiences.
Sure. And would you say that's what the biggest thing you learned from the business failure?
Yeah, definitely.
Yeah. And what anything else that you learned off of that?
Well, the phrase "never count your chickens before they've hatched,"
Yeah.
It comes to mind. That really does apply in trading as well, because you might have a trade where you have an unrealized gain. So you bought some Bitcoin, say for example, and it's gone up 10%, and then you're faced with the dilemma of, do I take profits and take a nice 10%, or do I leave it and collect 20-30% theoretically? And experienced traders, novice traders, we always go through that same experience of, I'll take a nice profit, 10%, great, fantastic. And then the next day you see it's at 20%, and you think, what could I had? The alternative is not taking profit and seeing it drop down to where you bought it, or even worse, below where you bought it, and thinking, well, I could have had 10% for free.
Sure.
So it's about getting around that. And one of the best ways to get around that is just to be flexible. So I have a mantra basically where I divide my trades into multiple tranches. And what you do is you take a small tranche at that 10%.
Yeah.
And what you're doing is you're being as flexible as you possibly can be. So when it goes up to 20%, or if it goes back down to the buying price, you can do something.
Yeah.
So it's almost like you're treating the markets as ambiguously as possible, and just adapting yourself to the market. You're not trying to predict the market. You're not trying to move against the market. You're not trying to, fight the market. All you're trying to do is adapt to it. And whatever it does, you just do the same. It's kind of what I do in therapy.
Yeah.
So a client comes to me, they've got an issue, they've got a problem. I might have 20 ways that I can think of that they might be able to solve this problem, but 15 of them just won't suit the client. They won't do the work. They won't want to do it. They will be too intimidated by it, etc. Their reasons are irrelevant. The same with finance. Okay, there might be 50 projects out there that theoretically could do the same gains, but they all have different risk appetites and risk profiles, and they all have different likelihoods of succeeding as well. Picking the ones that are likely to profit is more straightforward than just blind luck, trying to guess the market. That's what a lot of people do in crypto. They just rely on blind luck, and then they wonder why things don't work out the way they want to, because even if they are lucky, they don't sell out at the right price, or they don't exit at the right occasion, or they pay exorbitant fees. So effectively due diligence, and you asked me what lessons I'd learned from that. I suppose don't count your chickens before they hatch, and due diligence is the two lessons that I would say are most important there.
Yeah, so it'd been finding out more about your client and what
Yeah,
state they're in and
yeah,
things like
doing
that.
the hard work basically, which
Yeah.
is what people don't necessarily want to do. But if you apply the hard work in crypto, this is why crypto gets a bad rap, is that it's marketed as this thing that, you know, will make you a millionaire overnight, and it's marketed as thing as, oh, you just set up this account, you buy this crypto, it goes up 100x, and you sell out. Happy days, buy a Lamborghini. It's not quite like that.
No.
You need to understand, if you're going to, there are some people who do that and they make the headlines and then everyone thinks they're going to be like them. But you need to necessarily understand why crypto is moving the way it is. So, for example, if I can segue into what's currently happening in crypto at the moment, it's very much on point with failure. Last month, we had two major crypto projects collapse. $50 billion worth of crypto money was wiped out in the collapse of two tokens called Terra and Luna. Now, it's a bit complicated, so if you want to research this, go ahead. But basically, they relied on each other algorithmically for backing. Terra was a stable coin, so it was worth $1, or supposed to be worth the $1. And Luna was the mechanism by which you could mint or burn, create or destroy Tether, so USDT, basically. What happened is people pulled out a lot of capital out of USDT, which caused its price to drop to 91 cents. Then people decided to exploit that feature to mint Luna at a preferential price, which caused the Luna price to drop from $118 down to about $80. At this point, the people behind Terra Luna had a collateralized fund of $1.5 billion of Bitcoin that they decided to sell in order to increase the price of the stable coin back from 91 cents to $1. That actually had the inverse effect, because panic then ensued across the entire market, because every crypto token dropped, because every crypto token is correlated more or less to Bitcoin.
Sure.
So that exacerbated their problems even further. And then the token price dropped to 68 cents. By this point, you know, you're down 32% on an investment that's supposed to stay at $1 that is stable and secure, and it's supposed to be worth $1. Everyone panicked, and now the token price is around about 2 cents or so. And there are murmurs of, there's been projects launched to try and recreate or reestablish that. But the psychology of the market is now so fundamentally different that they're not going to the same, they might have the same product, but they're not having the same effect on the market because of people's, you know, there's still $10 billion of money waiting for that dollar to go back to, that 2 cents to go back to $1, which is very, very unlikely, because it's obviously going to have to, you know, 20, 30, 40 times its current market capitalization to get back to where it was, which isn't going to happen.
Yeah. Wow, there's some pretty big numbers there, and I'm sure some of our audience might be listening thinking, you know, that's huge, and how can I invest in crypto when things like that happen? So what would you say the biggest learnings are from that, and how would you, in doing what you do, sort of protect against those sorts of things?
Sure. So risk management is just fundamental. So we were invested in that token. The fund had $10,000 invested in that token. We had a stop loss triggered at around about 68 cents. So we lost around about $3,500 or so. Consequently, in the weeks since, we've actually made that back.
So just to catch you there, you've got, so when it gets down to a certain amount, it automatically sells out.
Yes. Yeah.
Okay, cool. Yeah.
So risk management is key, and especially in crypto. Now, crypto stop losses are a little bit of a double-edged sword.
Yeah.
Because crypto assets by their very nature are really volatile. And when you set a stop loss, you risk having it triggered by accident almost, because the price goes along, it goes down, and then it immediately rebounds, but you set your stop loss at the down point, and that's it, exited. And that's just unfortunately a little bit of a path of the territory, really, because it's just, you know, with something like Forex, you know, the dollar's never going to drop 10% in a day and then recover. You know, that's something that doesn't happen very often. But with crypto, that's a daily occurrence.
Yeah.
So you can hedge, you can own corresponding cryptocurrencies that kind of cancel each other out. And that was the kind of point of Terra Luna. The ironic thing about Terra Luna is that it was allegedly a really safe bet.
Yeah.
It was one of the safest cryptocurrencies. In actual fact, it was the safest part of our portfolio. Which reflects kind of the way people think about risk, is that people look at these projects, they say, right, how long has the project hadn't actually been around that long, but usually it's a case of legacy. So how long has the project been around? How much capital is deployed in it? And the problem is that those two correlate quite strongly and are comorbid. The longer that a project has been around, the more likely it is to have money behind it. But that doesn't actually affect the underlying risk. The project could still fail tomorrow. Okay. Bitcoin could fail tomorrow. Okay. It's very, very unlikely to, but it theoretically could. So one of the ways that I go into my investments is I psychologically write off that money to an extent, at least to the stop loss that we've put in place.
Sure.
And as long as you're comfortable and happy with that, and you can sleep at night knowing that 95% of my net worth is still in crypto, even at these prices.
Yeah.
It's not as comfortable as it was 4 or 5 months ago.
Sure.
But I haven't panic sold, which is where people do most of their damage. Is they panic sell, and they get out for a reason that is just how they feel in that split second, which is very. We trick ourselves all the time, and how you feel in one particular moment can be completely different to how you feel 20 seconds later. And if you're using that impetus to decide on whether to make large financial decisions, this is where the time in the market, not time out of the market, helps, where people say you should just put money in an index fund, leave it for 20 years and not really look at it. That's where that comes from. It's stopping those people from trying to buy low and sell high, basically,
Sure.
which obviously is bread and butter in crypto. The trouble with index funds is they aren't volatile enough to actually do that really well. But with crypto, you can. So a little story of mine, I bought a lot of crypto called Syscoin for around about 2.5 cents. It went up to $1.30. Now, if you're not buying low and selling high with those type of movements, there's something quite fundamentally wrong, because overnight you could pretty much triple or double your money, and if you're unwilling to take even a little bit of a profit on that, you're going to have problems. In actual fact, I do have friends and colleagues who did exactly that. So there was a gentleman I was coaching during 2020, during the lockdown. He had £80,000 of savings, and he put them basically all into crypto at really good prices. Around about November last year, he was up around about £150,000. So we had about
So on top of the
£230,000. So basically, he was up almost $250,000.
Wow.
In total. Felt it was going higher. Didn't take any profit. We recently had a communication after not speaking for a while, where he said that he was actually below everything he'd actually owned. So he'd basically watched £150,000 disappear. I think temporarily.
Yeah. Sure.
But if he'd have liquidated some of that, this is where the kind of not being afraid of failure is almost worse than actually having the failure.
Yeah.
Because what he was worried about is the opportunity cost of selling out and then not having that additional gain.
Yes.
But when it gets to 6 figures, you kind of just got to go pinch yourself and just kind of go, right, well, even if it does double from here, 100 grand is still 100 grand.
Yeah, you're still going to make some money out of it.
Yeah.
And I suppose for now, he's got to hold his nerve for a little bit and wait for it to go back up. And I think that's quite a valid lesson even in business, because before my business went under, I'd done about 3 years of paying myself about £1,000 a month. And I kept saying, I'll pay myself more when we make some more money. And what I should have been doing is paying myself a decent wage, because I was working the hardest and I was working many hours. And in the end, we came away with not any money, because we'd put all our savings into the business. We put everything into it. So I can definitely resonate with taking a bit of money. And it's definitely a key thing to do, whether it's crypto or a business. It's paying yourself, a return. So you if the business goes or the crypto goes, you've actually paid yourself something for having it. So yeah, that's really interesting. So the sort of the advice would be to anybody doing crypto is to be definitely taking a profit out of it at some point through the running time.
The advice is to have the idea of where you're going to take profit in mind before you go into the market.
Yeah.
So right now, if you're buying Bitcoin, it depends on your time frame. It depends what type of investor you want to be. Do you want to be a long-term investor, in which case crypto long-term is 12 to 18 months?
Yeah.
That's a long-term investor in crypto. The market time frame is just shorter than, say, a stock.
Sure.
Stock would be 5 to 10 years for long-term. Or do you want to be a hyper day trader? Do you want to buy a crypto that's down 20% today and it's up 20% tomorrow?
Sure.
What type of, they both have different kind of lifestyles, I suppose.
Yeah.
If you want to be up 24/7 watching the market, so that kind of really makes you excited, then go for the day trading. If you want to make money but not really worry about how much, or you just want to double or triple your funds, go for the long term. Sure. And generally speaking, the long term is going to have more success and less failure than the short term.
Yeah.
Just because you're going to be doing a ton of work to do the short-term trading for not probably that much of a payoff. Whereas with the long-term investing, you can just leave the money there. You can maybe earn a yield on it, which is even more attractive. So actually have it compounding during that process and then sell it out at a time. So if I were targeting the market at the moment, I'd be saying buy around $30,000 Bitcoin, sell at 60,000, double your money.
Yeah.
And not really worry about the time frame element.
Yeah.
In 2 years, you'll probably realize that. And, there's not many other investments out there that in a 2-year time frame could theoretically double your money, especially in the market conditions that we have at the moment, with the macroeconomic situation that we have at the moment, where everyone is a little bit more risk off, shall we say.
Sure, yeah, I've got a friend who does that sort of day trading, and he's usually up all through the night and, studying all the charts, and he gets a real buzz out of it. But he's taken a lot of time to research crypto and understand it. And certainly last year when I got into a bit of crypto, he was very much like you saying, I was the other end of the spectrum, where I was doing it more for a longer term investment, putting a bit in and not doing day trading and just going off his advice. So just tell me a little bit about you talked about at the beginning, the group of businesses that you've created or you're helping, invest into crypto.
Sure.
How does that work?
So effectively, this has been running as a beta program, basically, first and foremost, and it's called Trade Assist. And basically what it is if you're interested in crypto, you might have already had a dabble in crypto, basically, but you want a helping hand, basically, and you want to have it facilitated for you, you can join the fund. For the beta, there was a £5,000 deposit, and it's part of a limited liability partnership. So you're basically joining me as a partner, or the fund as a partner. And then what will happen is proposals will be voted on by the group, and a majority vote gets the consensus. It's effectively a very clunky, what's called a DAO, a decentralized autonomous organization. So there are digital versions of this happening within the crypto sphere that are all done on smart contracts. So they're all done via algorithms and that kind of thing. Maybe towards 2-3 years down the road, we might get towards that kind of area, but at the moment I'm centralizing the DAO, and everything is happening through kind of my trade ideas, my experience, etc. And I'm picking certain projects that I have either a long-term history with, or understand, or have done the necessary due diligence that could take 3 or 4 full-time days of just actually looking at the projects and working out whether they're long-term orientated, whether they're just fly-by-nights, or Dogecoin would be an example of a token that I wouldn't necessarily give much time to, just because it doesn't really have much utility behind it, other than when Elon Musk is tweeting on Twitter, in which case then I might, because then suddenly everyone decides that it's a brilliant investment and it's going to skyrocket. Sure. These are the things, the meme culture with crypto, which is kind of stopped because of this decline with the NFTs and that kind of situation. That was a little bit exhausting, because it was like people didn't look at these investments as investments. They just looked at them as just a way of printing money, basically, and they forgot the real term value of crypto is being able to digitize something of value that has an economic impact and send it anywhere in the world. Sure. That's what Bitcoin's use model is, basically. And then you have Ethereum, which is a digital computer. That's its offering. So understanding where the offering is one of the keys that I utilize in order to not fall foul of losing money in crypto. And obviously, with day trading, it doesn't really matter so much, because you're just using the volatility for its own gain. You're not staying in the market long term.
Yeah.
But with day trading, that's when you need to really up your game in terms of stop losses, that kind of thing.
So is this group, is that the long-term investment?
Yeah.
Yeah. So you're not doing any day trading within it. You're just using their money to invest over time. So these people, businesses that are involved in it, is that so they just have a hands-off experience essentially, and you just lead them to where?
So basically, they do votes. They have to
Yeah.
vote on every proposal. But all the transactions, everything is done through the firm, and they get a monthly report saying it's actually published online now through my Substack, Clearly Crypto, which I'm actually launching at the end of June. So that will be there'll be a performance report which is made public to subscribers, and 1% a month is basically the target that we're targeting. So that's a nice achievable return that in normal economic times is actually very attractive. 12% per year is actually really 3 or 4% more than the stock market will return, and maybe 1 or 2% on top of a good property investment,
or even just savings accounts now. Like you're getting nothing at all, are you? So
exactly.
So what do? You talked a little bit about earlier to prevent the risk of obviously someone putting their money in and it disappearing. So what do you do to mitigate that?
So I look for asymmetric risk opportunities. So would I buy Bitcoin at $65,000? No. Why? Well, because it's only ever been there once.
Yeah.
And when it got there, it was parabolic in its nature. So the risk there is really high.
Yeah.
There's something, it sounds a little trite, but there are two types of investor. There's dumb money and there's smart money. Dumb money, and we're all dumb money at some point, and we're all smart money at some point. We're not one or the other, okay? And dumb money are the people or the decisions that are made when things like Dogecoin come through. Because, you could buy Dogecoin for fractions of a cent and watch it go up to 2 cents and sell out and make a huge profit. Fantastic. You look like smart money.
Yeah.
But the reasons for your investment weren't smart. You just happened to be lucky.
Yes.
Paradoxically, you could put the most diligent work into a token, Value DeFi, for example, that I had. I lost $6,000 in an investment in Value DeFi that looked fantastic on paper. They had a really good smart contract. They've been audited twice by different institutions. They got hacked ultimately, so it wasn't really their fault ultimately. And in this new finance world, smart contracts hacks are just the new bank robberies. Right. They are going to happen. You just can't control for them. So there's a lot of talk about black swans and that kind of thing, but with crypto, you can't really say a black swan. A black swan event in crypto would be Bitcoin stopping tomorrow. That would be a black swan event. A grey swan event, as I kind of started to call them, would be this Terra Luna situation where the signs were there that something might go wrong, but they just weren't audible. They were lost in the noise. And obviously crypto is abound for noise. There's so much noise going on, news media, this, that, and the other. As soon as crypto takes a nosedive, the mainstream journalists are all over it, shouting it from the rooftops, and that's why everyone has a slightly negative opinion about crypto, is because there's either criminal activity going on or it's a place where people lose loads of money. And that's why the psychology in the next few months is going to be very subdued about crypto, but smart money will be exploiting this to make the most and getting the biggest positions down at these attractive prices.
Sure.
And kind of suffering in the short term for the long-term gain, which is kind of what failure does.
Yeah. It's
suffering in the short term for long-term gain. So if you're going through some kind of failure at the moment, or you think something is failing, it's actually, there's a phrase from psychotherapy, neuro-linguistic programming, there is no failure, only feedback.
Yes.
Now that's a little bit trite, because if you treat all failure like feedback, then you're not really going to learn as much as you might do if you were to just call it failure and be comfortable with failure. There's another book called No Regrets, where a gentleman decided to challenge himself to fail for 100 consecutive days with things like going to Starbucks and asking for a half price coffee. If they say yes, fantastic. If they say no, which he's obviously expecting, he gets to condition himself to not be as afraid of failure as he might have been. And it works all the way up to him going to ask someone to play baseball in his backyard just a complete stranger? And he says yes. And it actually taught him that, 70% of what we fear is our own projections of what we would do in those situations, where if we were asked about those situations, when we actually have no idea what other people are thinking in their heads at any given point. So if you go and ask someone, "Oh, can I have a half price coffee?" They might be like, "Yeah, fine. I'll put it on my bill, and we get a 50% discount as a staff member anyway. I'll just wave this one through, and you got a half price coffee. You feel good because you did something that challenged you and you got through with it." And it kind of, those little microcosms, those little experiments that you can do in your day-to-day life build up over time, so that when you have a big business decision and you're thinking, well, do I take the risk? Do I expand my business? Do I close my business? Do I take on this new contract? Do I not? You can actually think through the habits of thought that someone who is less prone to fear failure would do.
Yeah, absolutely love that, because I talk about it a lot. The fear of failure is what gets us to procrastinate a lot, and when we procrastinate, we fantasize over what could happen, and a lot of the things that we fear never actually come to fruition at all. And it's just that exact thing of thinking, what would I do in this situation, and around that. So I mean, that's really, really good, profound information there. I love that. So with this fund for the guys that you've got, these businesses that you've got involved, and you say it's in beta tester mode.
Yes.
Are you accepting more people into that, or are you just keeping that as a closed group at the moment?
I will be accepting more people into that. The mechanics of doing all that, this is why it's in beta, is because I'm literally figuring out as I go along.
Yeah.
I have a model that I'm working to that worked in my old place of work that actually it's not a model that I'm cloning. It's actually a model that I'm moving away from, because they used to charge 3% per trade. It was on a commission basis. This is a profit only fund, so performance only. So if partners make money, I make money. If we don't make money, they don't make money. This is a case in point. This month, we lost $3,500 last month. I didn't collect a fee.
Yeah.
This month, provided we make $3,500, I will collect a profit on anything over that.
Sure.
So it's really within my vested interest to make the fund work, and that's where our values are aligned. In a lot of investments, the value between the contractor or the supplier, if you like, and the customer are not aligned.
Yeah.
Even in the stock market and things like that, they collect their 2% fee regardless of whether your money is ultimately profitable. 10%, 2% fee over 10 years, adds up to quite a lot if you compound it out of a portfolio. I chose not to do a fee-based system. The business model at the moment is not taking any fees unless we make money, which, is an untested business model. Yeah. But I feel it really does highlight my commitment to my belief that crypto is a viable thing and a viable investment, worth getting into. And then it's kind of on my shot. They provide the capital, the seed capital, if you like, and then it's up to me to generate the returns. So far, the first month we generated 1%. That was great. We actually generated 3% unrealized. That disappeared because of the market. So we realized our 1%. So following through with the principles that I laid out earlier, we collected our 1%. The 2% that we could have had disappeared because the market collapsed. Second month, we lost 6% because of the Luna USD situation. We're now back up to break even. Yeah. So as of early June, we are back up to break even. By the end of this month, we should actually be 1 or 2% up. Yeah. So actually fulfilling that 1% over the 12 months is relatively straightforward given market dynamics, and obviously hopefully we'll see the worst is over for crypto for the time being. But we crypto does test you, and I think business in general, this is why I'm targeting small business owners, is because they have that entrepreneurial mindset. Yeah. They're willing to risk a certain amount of capital for an asymmetric reward when they understand what the reward is, which is exactly what small business owners do. Yeah. They see a product, they see a market, they see a sector, they see it's undervalued or undersupplied, and they want to take advantage of that. So they do that. And, whether it's a win or lose circumstance, that decision to go and chase that was still right. regardless of the outcome.
Yeah, and it takes time, doesn't it? Everything with business, it takes time, and like you say, it's not a short term gain. It's going to be over the next 12, 18, 24 months. So I absolutely love that what you're doing there. Your USP is that you've basically got skin in the game, which is your time and expertise.
Yes.
And if they don't make money, if you don't make money, they don't make money, etc. Which is a really good USP to have, and I think that will definitely build trust, because what people like to see is that you're going to be, you're making money when it makes money, so they know and can trust that you're going to be doing everything you can to make the fund work. Because if you don't, and I've not done much investing, so for me, I'd be thinking to myself, well, that's fantastic, because you don't want to pay somebody a fee, and then really that's it. They're just sort of sat there, and you're thinking, well, they don't need to work hard for this, and you're then doing your due diligence using all your experience. And you actually made a really valid point that you're in beta tester mode. You are kind of just working it out as you go along. I did an episode recently, which is self-development versus winging it, and having the right balance of just going out there and doing something and learning. And you could sit there reading and learning about crypto for 2 years, and then in 2 years' time start a fund. But then you've got 2 years of time where you've not been doing it. And I can see that you're doing the right balance of, you've got the experience, you've got the psychological experience, you've got the finance experience and the crypto experience. And now you're putting this together with your idea, and you're getting the right balance of working it out as you go along, beta testing, and then actually just, the kind of knowledge that you've got, and putting that together and making it happen. So I wish you every success, and I'm actually quite intrigued to talk to you in the future about that. So tell me about, you gave me, before we came into here, Peter gave me a book. So tell me about the book and how you come about writing that, and what that involved.
Yeah. So as I was working at the brokerage, which I won't talk about it now, but it is another story about failure that I can talk about in the future. I actually started the paradigm shift that I went through was really powerful. And I was talking to people on the phone, doing 4 hours of warm and cold calls a day, speaking to thousands of investors. And I just thought, well, there should be a book that basically says, why should you be invested in crypto? Because, I got everything. Oh, I don't want to invest in that. It's not real money. Why, I got the full list of objections as a salesperson that you would. And I had really good answers, I thought, for most of them that were empirically researched. They weren't just your trite, conversation, objection over, getting over objections that salespeople go through. They're actually focused on crypto and specific to crypto. So I thought, well, I'll write a book about why cryptocurrency is important, and make it quite short. And over 9 months, I actually wrote Crypto Profits, published it in January 2020. I did actually use an editor to actually tie everything up and make sure that my editor actually was complete crypto skeptic, which is brilliant, because I didn't want groupthink is a real problem in crypto, and I wanted him to kind of be the overseer. So I supplied him with 80,000 words. He cut it down to 40,000 words, quite brutally, but it was great, because what it meant was I had this short, kind of punchy argument to say, well, here's my thoughts on crypto. Let me know what you think, basically. And that was published when Bitcoin was £6,000, Ethereum was £200, and Ripple was 16 cents or 15 cents, I think. And since then, I've been proven right. Crypto was worthwhile investing. Bitcoin went up to 60,000. So Bitcoin basically did 10x, which is what I said in the book. Ethereum did 20x, and Ripple did 30x. So if you'd invested at the time that I published the book, in actual fact, my publisher, my editor, said he wanted to be paid in pounds, not in Ethereum or not in Bitcoin. If he had been paid in Bitcoin or Ethereum, then he would have collected a larger fee, proportionally speaking. But that's his prerogative. But now everyone goes, oh yeah, great, you did that. That was 2 years ago. What about now? And at the time, me saying Bitcoin was going to be worth, I think it was $100,000 or I was very deliberate not to say specific numbers, but I wanted to say percentages. So I did say 10x. So technically it would be 60,000. When you said to someone, all Bitcoin had ever been was 20,000, and you say 60,000, I think, oh no. I had a reviewer come back to me and say, well, this is very over enthusiastic, I think you put it. And it'll be interesting to see whether things match up kind of, tongue in cheek. But yeah, and then, if I was writing the same book now, I'd be saying, well, Bitcoin, 250,000 within the next 36 months. Time frames are a little bit interesting with crypto, but within 36 months, 250,000.
Yeah.
Ethereum probably 5 figures, £10,000.
Yeah.
And Ripple probably around about $5 or so. There's a little bit of controversy with Ripple being involved in the SEC at the moment, which might mur that.
Sure.
But people look back and they think, if only I'd invested then, I'd have this now. And it's always the hindsight bias kicking in, basically. And what people don't do is the market conditions at the moment, they cause complacency, because people think, it's been $30,000 for the last 6 weeks. It'll stay there. What I'm really hoping is I'm just planning to grow this fund idea at the end of June. I'm doing a talk at Old Bond Store, and I'm hoping the market stays where it is at the moment, so that we can leverage up, put more capital in at really, really attractive prices. I actually held off the first month of the fund from buying anything because everything was very highly priced, I thought. And then it got down to a nice attractive price, and then it dropped even further.
Sure.
So it's kind of swings and roundabouts in that kind of perspective.
Yeah.
But the book sold relatively well. It's got 218 reviews on Amazon presently, which I'm very pleased about. And if you have read it, please review it, because I want to, I want to encourage people to think critically about crypto. Yeah. There's a lot of other books out there that don't encourage people to think critically about crypto, and I want people to actually examine their thinking about crypto, and if they're not attracted to it, why? That's perfectly fine. If they can answer me why they're not particularly attracted to crypto, great, fantastic. If it's not for them, they don't like it, it's too volatile, if they haven't got the right risk appetite, perfect. My parents are not attracted to crypto in any way, shape, or form. They just don't have the stomach for it.
Sure.
But if you're an entrepreneur, and if you're prone to risking £1,000 with the potential of getting £2,000 at some point in the future, and you could afford to lose that £1,000 in an unprecedented black swan event, then fine. That's the type of person that I'm looking to read Crypto Profit.
Perfect. And so the name of the book is?
Crypto Profit.
Crypto Profit, and you can get it on Amazon.
It is available on Amazon.
Perfect. Okay, so another question I've got for you. If it's probably a series of 2 or 3 questions, but the first one would be, if somebody is listening to this and they've had a load of money, like your friend has, who it went up and it went down, and they're now licking their wounds a little bit, what would you say to that person if they're getting a bit nervous with their money in there? What bit of advice would you give them?
Zoom out. Look at the charts, but zoom out perspective-wise.
Yeah.
Bitcoin went from $20,000 to $3,000. And there were people still holding at $3,000 that had their profit-taking opportunity at $20,000.
Sure.
If you pan out and zoom out of crypto markets, you actually realize the volatility isn't what you think it is. Yeah. If you're checking every single day, as I do, you can get very much whiplashed. Yeah. I bought Bitcoin at 29,500 over the weekend. It's now 31.5 on Monday morning. Do we take profit? Probably not, because it's probably going to continue with momentum.
Sure.
So if you're worried about your portfolio, just think long term. There's a seesaw of operation, basically. When people are really shouting crypto from the rooftops and everyone is really positive and optimistic about crypto, get out. When everyone is really fear, uncertainty, and doubt, FUD. When there's a news story every day about crypto being destroyed, regulated, collapse incoming, etc. That's the time when you need to be either re-examining your portfolio, re-examining your previous decisions, recalibrating it, because now is a great time, if you've seen different crypto opportunities and you think one is better than the other, to recalibrate, because everything's basically on the start line again because of the drop. You can actually do that and take advantage of that opportunity, and just to ignore the noise, basically. If you're investing in crypto, you should know why you're investing in crypto and where you're going to get out. Yeah. And as long as those two things are still as resolute as when you made them, that's fine. If something's threatened that, for example, if you're invested in a crypto project that's maybe 75% down, but it's not because of market conditions. It's because the firm has collapsed, or the leader has left the project, or something from a value investing perspective has changed. I.e., that if it was a stock, you would change your opinion as well. That's when you reevaluate.
Yeah.
So as long as everything is the same as it was when you were all-time highs, if not better, that's the key difference. If it's better than when it was at all-time highs, invest more, if you're able to, or just leave everything as it is.
Sure.
The alternative is to find a yield-bearing arrangement, so earning a yield on your crypto. So it's not just sat there doing nothing, or it feels like it's not doing nothing. You're actually generating a revenue, and that's something that I could theoretically talk to people about if they're interested, because there are numerous opportunities out there for, even Bitcoin, Ethereum, any big crypto project. You can earn maybe 10% per year just with it sitting there.
Yeah, sure.
And that's something that people can do if they're worried.
So it goes back to what you were saying earlier, which is doing the due diligence and knowing that.
The more you know, the better.
The more you know, and knowing that that particular project, like you say, the leader's gone, or it's a project that's gone south, and knowing that, which I think quite a few people don't know, because for me, I just looked at crypto and there's just lots of three letters on a thing, and I'm looking, what's this, and I'm going to my mate, what about this one, what about that one, and he's done lots and lots of research. So it's definitely doing due diligence. So I suppose that leads me on to the next question. Anyone who's listening to this that doesn't know anything about crypto, who's thinking, I might like a bit of that, and I've got some money I'd like to invest, what bit of advice would you say to them, apart from obviously reading your book, but what bit of advice would you give them?
Sure.
And I suppose the question's two answers. Somebody who wants to dive deep into it and do the due diligence, and what advice would you give to someone who just wants to do a passive sort of, I say passive, probably not the right word, but just sort of invest and let someone else do it?
Sure. Okay. So first and foremost, an announcement, exclusive. I'm actually planning exactly this type of mechanism for my new offering, which is called clearlycrypto.co.uk. Effectively, there's going to be two tiers. There's going to be a proprietary tier and there's going to be a free tier. Now, if you just want to dabble and you're not really interested that much in crypto, but you just want to do it the right way and you want to have the right kind of thoughts about it, you can sign up on Clearly Crypto to the free tier, and you get one email a week that basically provokes you into thinking about crypto a little bit more. And it kind of challenges the assumptions and gets you kind of ruminating and thinking about crypto in a way that perhaps you wouldn't do if you were just doing standard investing. The proprietary model is you pay a subscription to get access to all of my writings, basically, including the fund writings, and including kind of proprietary trades, ideas and analysis and moving capital around, that kind of thing, where you're able to actually effectively copy what I do, basically. And you can choose in that what you decide to do. So if you have no idea about crypto at all, just buy Bitcoins. Just buy Bitcoin, Ethereum. Do a little bit of due diligence, like with things like Ripple, for example. So if you type Ripple right now into Google, pretty much front page of Google is going to be something to do with the SEC and their investigation. So you can kind of go, hang on a second, am I willing to risk that? The second the SEC drops that case or they win it, buy Ripple. 150% trade right there. But if you've got to time that really carefully, you've got to really be on it. So I say that with a pinch of salt. If you're able to buy, if you hear on the, if you're at your desk trading and the news is on and you hear that it's done, just buy. Otherwise, you're probably going to miss it because within half an hour, the trade will be over.
Sure.
But just buy Bitcoin, Ethereum, top 10 projects. This is where the Terra Luna situation was unprecedented, because top 10 projects are usually quite safe, but they collapsed. But what you're looking for is decentralization. So Bitcoin and Ethereum are decentralized. Terra Luna was not. It was actually quite centralized.
I see.
So what you're looking for is decentralization. So I would say just buy, if you've got £1,000, buy $500 of Bitcoin, buy $500 of Ethereum. Try and be diversified. I actually have a playbook that I'm launching as well as part of Clearly Crypto, which has specific instructions of what to do if you have £1,000, if you have £3,000, if you have £5,000 to invest, and you don't want to do it through a third party. And you can just literally put that to work. You can earn a yield on it, 10% per year. So not only are you investing in crypto, you're also earning 10% a year on it as well. And that's all, kind of provided for you in kind of paint by numbers approach to crypto, basically. So you don't really have to do any of the due diligence because everything has been done for you. And the due diligence is minimal because it's a decentralized asset that doesn't have a corporate behind it, doesn't have an LLC behind it, doesn't have a leader. For all intents and purposes, Ethereum has Vitalik Buterin as its leader, but he doesn't really have ultimate control over it. It's a decentralized environment where 4,000 developers are working 24/7, and if Vitalik were to decide tomorrow he doesn't want to be involved in Ethereum anymore, Ethereum would still continue.
Sure.
Whereas with Terra Luna situation, the person behind that, if he decided that he didn't want to be involved with it anymore, that would cause a bigger issue with that particular project because it's so centralized.
Kind of related to business again. You don't want you to be the person running it to be the central point that's keeping the whole glue together. You want it to be able to run itself, right? So is it Clearly Crypto?
Clearlycrypto.co.uk.
Okay, that sounds amazing. And that will help people understand crypto. You'll deliver things maybe more in layman terms so people can understand it. And there'll be different tiers to the offerings that you give through that.
Yeah.
Clearly Crypto, Peter, when will that be coming out?
So that's live now.
Okay, amazing. So people can go to your website, which is
clearlycrypto.co.uk.
Okay.
And they can select, opt in for the free tier to start with.
Yeah.
See if you like the sound of what I'm doing.
Yeah.
And then if you want access to proprietary information, there'll be there's small snippets of the proprietary information on the website anyway. So if you like what you see and you want to read more, you can join the subscription.
Perfect. Amazing. Absolutely love that. And I think that's a fantastic way for people to get into crypto, understand it. Because I know there's a lot of people out there who are looking to invest money, especially with the way interest rates are at the moment. People do have pockets of, £5,000, £10,000. And it's not really earning them any money, but it's not enough to go and buy a property or any other firm investment, but they're looking for somewhere to put their money. So definitely, I'll be checking that out. So moving on to just a bit more around failure, what would you say, what do you see fail forward is, and what does that mean to you?
So fail forward, I see it as kind of an unrelenting perseverance to continue no matter what, basically. And this is where kind of the principles-based approach comes to. Why are you doing what you're doing? I'm doing what I'm doing because I want to make money for myself through helping others make money. That's basically what I'm doing. And I can be really clear and really obvious, and there's no hiding that I'm a capitalist, but I'm also a utilitarianism, and I want to make sure that people benefit as a result of both practices.
Sure. So
that's where I'm kind of going from. And whether I do that in therapy, whether I do that through trading, whether I do that through anything that I decide to turn my hand to. My first business was called Catalyst Therapy, but it was the catalyst that I wanted to emphasize. I viewed the client coming in, me being the agent of change, the catalyst, and them leaving differently, but me not changing. I was a little bit naive in that because obviously I do change, I'm not an android. I am still going to change, and my perspective on the world is going to change through the people that I help. So I want to get to a point where I'm managing 50, 100 people's investments, but doing it in a principled based way where they're all facing the same direction, they're all doing the same thing. Having this trading desk approach where one trading desk is doing something different to the other trading desk just creates too much cognitive dissonance for me. And I'm just, this is why having a discretionary approach to cryptocurrency is actually a problem, because everyone involved in crypto has their own ideas about crypto. And, you can argue until you're red in the face on Reddit about who's right and who's wrong. But ultimately, it's down to the market to decide who's right and who's wrong. And no matter how firmly convinced you are of your opinion, you're not going to affect the outcome.
Sure.
So if you were to have, say, one investor say, I want to do this, and another investor say, I want to do that, who's right? Well, it's probably best if we look for principles and negotiate based on, positions as opposed to, principles, and look at so they want to make 5% a year. Great, fantastic. They want to make 15% a year. Okay. But the risk appetite for both investments is completely different. The 15% has a 100% risk element. The 5% has a 20% risk element. Okay, so what if we just give the 15% 3 times the amount of investment that the 5% has? Great, fantastic. We'll balance everything out. They both get what they want from a positional aspect, but they haven't risked a tremendous amount more to get the benefit that they're having. So that's what I'm basically trying to do with the fund, is say, well, the wisdom of crowds theory in crypto actually has quite a place. Generally speaking, the majority are right in the long run, if you see what I mean. So right now, no one really is interested in buying cryptocurrency, apart from the people who I've called earlier smart money.
Yeah.
But they're willing to sacrifice potentially it being down for the next 6-12 months for the long-term gain.
Sure.
Okay. And, so people who are quote unquote dumb money down here will be going, well, I don't think the bottom is in. So I'm not going to put anything in. You could not think the bottom is in and put some money in. That's a good start. But they're going to think, oh, I'll buy at the very bottom. I want to see $20,000 for Bitcoin. Might not ever get there.
Sure.
And then the pundits will come out and they'll say Bitcoin's going to go to $8,000. And then they'll be like, okay, that supports my view. I've got some, but when Bitcoin was $3,000, people were saying it's going to go to 1,000. Never did. So there's always this kind of toing and froing, and failure is inevitable in any of that. Someone's going to be wrong, and this is what you need to be kind of comfortable with if you're going to be a trader, is you have to be comfortable with being wrong almost immediately.
Sure.
So when I wake up in the morning, if I check the charts, I instantaneously know whether what I believed when I went to bed is still applicable or not.
Sure.
So yesterday, over the weekend, I bought Bitcoin 29,500. I didn't buy all in. I thought it might go down to 27, 26. Today it's at 31.5. I was obviously right to buy. Brilliant. Yeah. I could have bought more.
Yeah.
But then again, I might check it tomorrow. It might be down to 27. So you're never actually 100% right, and you're never actually 100% wrong.
Yeah.
There's always this failure is never an explicit event. It's just a process.
Yeah.
And when you get the other side of that process, you realize that a success is just inevitable, or it's success is only the other side of failure. So failure and success are the same sides of the same coin, basically. And because you've had 4 failures doesn't necessarily mean your 5th is going to be a failure as well. But paradoxically, if you've had 4 successes, your increase, it's more likely you're going to have a failure because you're going to be overconfident, because you're going to be, too big to fail, that kind of thing. Yeah. We see this all the time in trading, where people, they have a string of successes and then they think they're masters of the universe and nothing's going to go wrong, and then it all blows up.
Sure. And is this where the way you'd have like lots of different pots essentially of different funds that you're
diversification, in.
Yeah, and then you're taking small amounts of profit,
yes.
So you're always just making a little bit along the way when it's obviously going into a decent market.
Yeah. If if you're looking to make out of the world returns, you're probably going to make out of the world losses as well. And that's where diversification in crypto, because it's only a crypto fund, is a little bit of it's a bit paradoxical, because I'm not really diversifying. If you were to go to any financial advisor and say, is this portfolio diversified? They would say no, because I'm not investing in different sectors. It's all in crypto.
Yeah.
But the implicit assumption is that crypto is going to be the next Web3.
Yeah.
And if crypto is the next Web3, you don't need diversification outside of crypto in order to make returns. You just need to protect the assets that you invest in and make sure that those projects are going to be long stays of that development. You're effectively buying into an emerging market, but the emerging market is not geographically based, it's worldwide based.
Yeah.
And as long as you can stomach those threats to that ecosystem and remain grounded and not have all your eggs in one basket, and also not have your entire investment portfolio in cryptocurrency, which is where I'm breaking that rule, because I do have my entire investment portfolio in crypto. But then I'm, I'm in it for all or nothing returns, basically, because I believe it has all or nothing returns. And if it's nothing, then I've got a backup plan that's there in the background. But I fundamentally believe that this is going to be the next kind of web model that the world is going to work by. So if I weren't in 100%, then I wouldn't be in at all.
Sure. Sure. Yeah. And I think my friend who talks about crypto, he says it's our generation's version of our parents with property, because a lot of our parents bought property and had a house and then that was their retirement fund when they downgraded because of how the property market has gone over the last sort of 20, 30 years. And he very much calls crypto that of our generation. If you invest wisely now, then in many years to come, like you say, if Bitcoin hits, a couple of 100,000 or whatever it's going to go to, then that's going to be very nice for someone's retirement in the future, or certainly helping pay off their house mortgage, whatever it may be. So
crypto is actually too mainstream right now. It's become very correlated with the NASDAQ, and it's become very correlated with the stock market. That's not what's supposed to be. Crypto is supposed to be a multiverse. It's supposed to be different to regular money.
Sure.
And where your friend is coming with that is saying, the only way that millennials, Gen X's, without having being in the 1%, the only way that they're going to theoretically get ahead in life is by investing in crypto. Because it's outside of that. It's parabolic. It's exponential in nature. Because of its small market cap, any investment at this low level, we're still low right now, is going to be magnified by 5-10x more than you might in the stock market. That doesn't need to say that when things are different, when the market cap of cryptocurrencies is beyond 3-4 trillion, there are other investments that you should be getting involved in. That's definitely not. Not what I'm saying. It's just looking at the market cycle, look at the timing. Timing right now, crypto is fantastic as a low asymmetric risk reward opportunity. Property, on the other hand, is all-time highs. Stock market, again, was all-time highs. And just looking at that from a risk perspective is, where am I likely to make the most money in the shortest time frame? Not really thinking explicitly about a time frame, but in the shortest time frame. Crypto, or in an asset that's probably going to decline before it goes any higher. And if it does go higher, its returns are going to be largely limited in the current circumstances.
Yeah, and the cost to entry is
exactly.
Big as well.
And
so
there's a huge cost of entry. The cost of entry for crypto is education.
Yeah,
that's the learning curve that needs to be overcome. Yeah, which obviously a lot of people will do, but you need to do it in a way that you're kind of resilient to the noise, resilient to the failure, resilient to making small mistakes. Like even sending crypto between exchanges is terrifying. Yeah. Because if you send it if you make one character, the 25, 30 strings of characters to send a Bitcoin address, if you make one mistake, that's your money gone.
I had to do that with, I had to send some stuff to Coinbase, because what's the other one that couldn't be in the UK anymore? Binance.
Yeah, Binance.
Yeah, and I had about $4,000 in Binance, and I had to send it across, and it was, my friend had to talk me through it word by word, and I was panicking because of that exact thing. It was, as you say, terrifying. So. Yeah.
And there's been loads of stories of people just literally just making small mistakes. There's USDT and there's TUSD. So there's two stable coins that are really similar. And if you get them wrong, that's your money gone. Oh. There's no bank to phone up. There's no regulatory body to phone up. That's your money gone.
Hence where clearly crypto is going to be that support mechanism for people that need that, which I absolutely love. So we're starting to get towards the end of our time. I've really enjoyed today's interview. Have you got any sort of final words that you'd like to say to our audience?
Yeah, if you are looking at investing and if you're looking at wanting to get involved in cryptocurrency, then please just have a chat with me. Yeah. I'm available on LinkedIn. I'm obviously got my Clearly Crypto and Crypto Profits books out there. So just stop me for a chat. I'm happy to have a coffee. Yeah. If you've got any general questions about crypto, or if you want specific advice, then obviously we can have a conversation about that. But yeah, if you've been scratching your head about crypto for a few years now and maybe had some friends who've done it, this, that, and the other, you've obviously watched their successes and failures from a distance, that kind of thing. And if you actually want to start understanding why, crypto is probably going to be a really big thing in the next decade, then I'm very open to having a conversation.
Amazing. It's been great to have you on board. So audience, please go and buy Peter's book, look up clearlycrypto.co.uk, and thank you for being part of this episode. So thanks everyone for listening and watching the Fail Forward podcast, and I shall see you next time.